Have you ever looked at the market and just thought, what is going on? It feels like that's exactly where we are right now. It's a really strange, kind of confused market. So in this explainer, we're going to break it all down. The conflicting signals, a massive hidden risk you need to know about, and a huge potential opportunity. All right, let's get into it. So this is really the central question for every single investor today, right? On one hand, you're hearing all this talk about strength, but on the other, you're seeing some major weakness. It honestly feels like the market is trying to pull itself in two different directions at the same time. And this slide just shows you that disconnect perfectly. I mean, look at this. The tech-heavy NASDAQ is actually down for the year. Meanwhile, you've got hard assets just soaring. Silver's up a staggering 24%, and crude oil has jumped over 7%. These are just not the signals of a healthy, unified market. It's a picture of total confusion. To really get our heads around this disconnect, let's zoom in on a perfect case study, Meta Platforms. It is such a classic example of a stock that's performing weakly, but it's masking an incredibly strong business humming along underneath. And this just brilliantly illustrates the problem for anyone holding the stock. Over the last 6 months, while the broad market, the S&P 500, gained 10%, Meta's stock has fallen by 15%. We're talking about a massive 25-point swing in the wrong direction. The stock, to put it simply, has been a terrible performer lately. So it's really easy to look at a chart like that and just think, okay, something is fundamentally broken with this company. But this is exactly where we have to separate the short-term noise of the stock price from the long-term reality of the business. So let's pop the hood and see what's really going on. Because when you look at the fundamentals, wow, it tells a completely different story. The business itself is an absolute powerhouse. Revenue is growing at over 20% for a $1 trillion company. That's just shocking. Gross margins are over 80%. Net margins are over 30%. That's pretty much the holy grail for a business model. And on top of all that, they're constantly buying back their own stock, which just increases the value for everyone who holds it. And the future potential here is just immense. You've got Threads, which is sitting at around 400 million users, and they haven't even started to monetize it yet. The plan is to get to 1 billion users first. Then there's WhatsApp, with over 3 billion users, and it's still in the very, very early days of making money. Plus, the guy in charge, Mark Zuckerberg, is only 41. He's just entered his prime business years, which can often last from, say, 40 all the way to 65. Now, while we see this incredible opportunity in specific companies like Meta, there's a major systemic risk lurking in the background that affects absolutely everyone. So let's shift gears and talk about a huge red flag that is flashing brighter than ever before: margin debt. So here's the crucial point. The amount of money that investors have borrowed against their portfolios, that's what we call margin debt, is at a new all-time high. That means the market is more leveraged, more stretched than it has ever been. And that dramatically increases the potential for a really powerful cascading sell-off. And here's exactly why that is so dangerous. Let's say you've got $25,000 and you borrow another $25,000 on margin. Now you have a $50,000 portfolio. You're thinking, great, I'm going to double my money. But what if the market drops 50%, which, isn't unheard of? Well, your portfolio is now worth just $25,000, but you still owe the bank $25,000. So after you pay back the loan, you're left with zero. Your entire initial investment is completely wiped out. It's a brutal, unforgiving way to lose money. Understanding risks like this is exactly why we do these breakdowns. If you're getting some real value from this analysis, please just take a quick second to hit that like button and subscribe to the Stock Market Mojo YouTube channel for more. It really helps. So how do you even navigate a market like this? You've got this clear disconnect between value and price on one hand, and a major risk looming over the whole market on the other. Well, it all comes down to a clear action plan, focusing on high-quality businesses that seem to be undervalued. Here are 8 stocks that were recently added to the portfolio based on this exact thinking. The list has names we've talked about, like Meta, but it also has other strong companies. You've got PayPal with what looks like a really attractive valuation. You have high-growth names like ELF Beauty and Celsius. There are established tech giants like Adobe, Salesforce, and AMD that just seem to be misunderstood by Wall Street right now. And finally, a super steady player like American Express. You see the common theme here, right? Strong fundamentals in a very confused market. And this quote really gets to the core philosophy here. Instead of getting tempted by all that leverage and margin, the real game is simple, but it's not easy.
It's all about focusing on your earning power, doing the homework on companies, investing consistently, and just repeating that process over and over again. That's how you build real, lasting wealth, not by taking these crazy shortcuts that can send you right back to zero.
So I'll leave you with this final question to think about. While it seems like everyone is focused on the short-term noise and the fear, could it be that the real risk, the biggest risk of all, is failing to see the incredible opportunity this confusion is creating right in front of our eyes? For more deep dives to help you navigate this market, make sure you're subscribed to the Stock Market Mojo YouTube channel. Thanks so much for watching.